In this video, I'll quickly walk you through counting the waves, this particular exercise that I talk about quite a bit in the Facebook group and also on my YouTube channel. But I actually conduct this exercise with my coaching students when I trade with them. So this was a trade this morning on the euro. So you're looking at a 5-minute candlestick chart on the euro. And all I'm using is volume here to confirm this. So this is, again, an exercise that I conduct with my coaching students. We're counting the waves. And then we're looking for these turning points. Now, there also is the phase analysis portion of this particular exercise. I'm not going to get into that right now. We're just going to talk about why it's so important to count the waves using volume so we can identify these turning points and then get in when price is likely to make the next move, right? You don't want to be on the wrong side of it. You don't know if you're looking at an area of consolidation that could create a bounce and a reversal, or is it an area of consolidation prior to the next move lower? Once you have these concepts in your mind and you've got the mindset for it, you understand what's going on, you can comfortably wait during the consolidation process as the smart money is acquiring or distributing whatever, whether you're in accumulation or distribution, as they're making their moves, and you don't have to participate in that because it can get pretty choppy. So again, this is a 5-minute candlestick chart. This already paid 25 pips to the first target. Now, we always want to have a first target and then a second target. We pinpoint our entries with the point and figure. The point and figure allows us to calculate how far price is going to go. We lock in profits at the first target, and then we set the second half of the position at a break-even stop loss, so we don't give back the 25 pips that we've earned so far. But if it continues, we could earn whatever the profitability is to the second final target, which is that final count on the point and figure. So let's go ahead and review what we're looking at right here. Again, we see this move here. We're counting the waves, and this is all one price swing, right? We see a bearish move, bearish candles, one after another, for a total of 10,300 contracts within this move right here. Again, this is a 5-minute candlestick. And then we get that little pullback right there. There's 1698 contracts, and then it makes another move lower for 13. Now, this is obviously going to have to settle because we had this solid move right here that was 1, 2, 3, 4, 5, 6 candles in a row, printing a total of a volume of 10,300. So this is obviously not too surprising. That really isn't much of a signal at this point, but we can see that the candle isn't closing below that stopping action. This would be our selling climax at this point. Again, there's also the phase analysis to identify exactly when to get in and how smart money is moving within that consolidation phase. So now we see that it's starting to form some kind of a low, and then we get another candle right here that prints 1,049 contracts. It's just not making any attempt or any effort. It's just not getting anywhere near that support low. It's not breaking through that support. And then we have these two candles here that print a total of 2614. Now we're starting to see things develop in the opposite direction. We're starting to see some more bullish momentum to the upside. Again, this is the highest reading so far this morning. And then we have one more test. The testing is critical. It's part of the confirmation, and it also shows us how and when and why smart money is moving throughout this consolidation phase. This is the testing phase. This is the last final test before we start to see this markup phase. So here with these two bars, we see a total of 2463 contracts. That is quite a bit. That's pretty significant because you can see at this point that it's a really poor close in relation to that support. If there was going to be a significant move to the downside to see if the trend would resume and price would go lower, we would expect to see more bearish confirmation in this candle. And that's just not what we're getting here. We see a lot of volume, but it's not closing very far. So we see a lot of effort with very little reward or result as it starts to move through that support level. That's the divergence that we're looking for. We see a lot of volume, a lot of participation, and then it starts to roll right back up and closes just below that support level. Now, sometimes they'll look just like this. They'll close just below the support. Sometimes they'll close back up above support. All of it is just another confirmation. It's another form of confirmation that smart money is acquiring throughout this process before the markup phase. And then we see it turn around again. We're still seeing pretty healthy volume levels to the upside. Again, one more test back down here. Again, it doesn't take out the low. Volume is diminishing to the downside. And then this is the actual breakout. This is where we get our signal. So we have these 3 candles right here that print a total of 4,200 contracts. That is the most significant bullish amount of participation that we see all morning here, and this is the breakout above this little range of consolidation. And then, of course, we expect the testing. The testing is confirmation, and it's not a deep test. Sometimes they'll be a little bit deeper than what we see here, but we can see with these three candles right here, they're forming a base, and they're starting to turn right here. This is our entry. At this point, once we've confirmed that the testing phase is over, it's broken out of the range of consolidation, and it's starting to make its move higher. We've confirmed it with the wave counting methods, tracking volume, analyzing and tracking the behavior of smart money prior to the markup. This is our confirmation. So again, you'll notice that when we get into these trades, we're not getting into these trades over here where we sit through all of this consolidation and it gets really choppy. When that happens, if you don't have a whole lot of experience and you don't know what's going on, it's really easy to put a really small stop on the trade, and you're going to get stopped out left and right. You're going to get stopped out when you go short. You're going to get stopped out when you go long. It can happen. It used to happen to me all of the time. It was really frustrating because I didn't understand what was going on. When you understand what's going on and you let the smart money make its moves throughout this consolidation phase, wait for the breakout, count the waves, identify the footprint of smart money, you know when it's breaking out, you know when it's likely to move. And we don't mess around inside of this phase B. We stay out of it. It gets too choppy. It's really difficult. You're babysitting a trade. This is a 5-minute bar chart or a candlestick chart, but the same behavior and the same pattern sets up on a 30-minute, a 1 hour, a daily time frame. So it can be really, really difficult to try and trade inside of this range because all you're doing is scalping. You can lose a great deal of money if you're not careful. So you'll notice again, we get in just as the smart money is starting to make its move. We can track it. We can identify it. It's very obvious. We get picture perfect entry opportunities, and we just ride the momentum and we ride the trend. And we do this every single time. This is what you need to learn so that you're always trading with the smart money. It's important that you develop these chart reading skills so that when you allocate capital and you put your money into a trade, you're likely to get paid a lot quicker relative to the time frame you're trading off of. Again, this works even on a daily time frame, the same basic principles.